Today is sources telling NDTV Profit that the centre is considering a simplified two-slab GST structure, potentially removing the existing multiple tax slabs. My colleague Shrimi joins in with more details on this one.
Centre has proposed a major revamp in the goods and services tax regime by suggesting to move to two slab structure from the existing four slab structure, which is 5%, 12%, 18% and 28%. Now, what the proposal says is that two existing slabs, that is 12% and 28% will go away, and those items fall under category of 12%. 99% of those items will move to 5%, and those items which currently attract 28%, most of the item will go to the 18% bracket. Now, what will happen to demerit and sin goods which currently attract 28%? The proposal says that it will fall under the category of 40%, but that will be 5 to 7 items like tobacco, pan masala, etc. will be now under 40%. Some concessional rate is also talked about, like labor-intensive sectors will continue to be on the concessional rate between 0.2 to 0.5%. Now, all these proposals are currently at the deliberation stage. The proposal has been shared with the GOM, which currently examining the rate rationalization process, and perhaps they will come out with a final report that will go to the GST Council meeting, which is expected somewhere in September and October, and perhaps they will take up the matter and take a final decision on.
Okay, thank you for that, Shrimi. But to discuss this further, we are now joined by Abhishek Rastogi, GST expert of the same. Hi, Abhishek. Welcome to the show. First of all, you've heard the commentary on what is being said about these two slabs going away, potential beneficiaries in terms of sectors there for MSMEs there. Just want to understand your overall take on this move that we are looking at.
Anushi, I think implementing GST cuts when the economy needs stimulus is like making hay when the sun shines. And I think the objective is very clear: rate rationalization, ease in compliance, and I think moving a lot of products to a lower rate. That's what I think the vision looks like. So as far as the 28% rate is concerned, we have done some arithmetic that which products could go from 28% to 40%. And I think high-end motorcycles, premium cars, cigarettes, tobacco and tobacco products, pan masala, cigar, aerated drinks, and race clubs and gambling would all go to the higher rate of 40%. These are considered as demerit goods. Now, what happens by reducing the rate from 28% to 18%? It's basically greasing the wheels of commerce. And if we see the products which come down from 28% to 18%, small cars would get the benefit. Consumer durables, AC, refrigerators, monitors, projectors, dishwashers, and even TV sets which are more than 32 inches are expected to get the benefit. We spoke a lot about tourism in India. Today, the hotel rates, when the tariff is more than 7,500, is at a higher rate of 28%. So these five-star tariffs for these where the tariff is more than 7,500, which is today taxed at 28%, would also come down, is expected to come down to 18%. Similarly, cement, lot has been debated about cement. Cement comes down from 28% to 18%, impacts the real estate sector significantly. And last but not the least in my list is some of these events like IPL and Pro Kabaddi League, which are today taxed at the higher rate of 28%. And this would come down to 18% as well. So I think a majority of these products which are not in the demerit list goods would come down to 18%. The 28% would go up to 40%, because in any case there were cesses on this as well. The effective rate was much higher in most of these cases, was much more than 28%. The exception, of course, could be some products like BDs, which were taxed at 28%, but there was no cess on BDs. So I think that could be one product which may looks difficult to go to 18%, but may go to 40%. So there will be a lot of reject. But I think more importantly, what is important is that the classification disputes gets addressed. I think the vision of the Honorable Prime Minister is very clear, that he wants, now with 8 years of GST, he would want the robust tax system, because he would not want any tax leakages. But at the same time, he would want to enhance the ease of doing business. reduction in compliance burdens, etc., cancellation of these registrations, and we have seen a lot of these credit issues which have come, which leads to tax cascading
Right,
and
Abhishek.
in turn leads to inflation.
Abhishek, also want to get, you've given us a comprehensive view in terms of how the various sectors could be affected, but even in terms of services, insurance is one area wherein there is talks about there being a reject over there as well. Your view on the same?
So I think some of these services like insurance, health insurance, etc., they can't certainly go to maybe 5% rate, but maybe there is a thought around it to give some sort of abatements to these insurance. We have seen in the past that for life insurance and other insurance services, there have been abatements. So the rate remains at 18% because they would not want to rejig or have multiple rates. Could be a separate category of abatement percentage which would come down to make the effective rate lesser than 18%.
Okay, thank you so much, Abhishek, for joining us. But we are also joined by Abhishek Jain, partner and national head of indirect tax, KPMG India. Firstly, welcome to the show. Now, it's the same development that we're talking about, center proposing two slab GST structure with existing 12% and 28% of tax slabs going away. What do you make of this move, Abhishek?
No, I think this is a very, very welcome move because then largely we'll have two rates, which is a merit rate of 5% and a standard rate of 18%. And of course, the demerit rate, it seems that it will be 40%, which will only be for very, very select goods. But other than that, it will only be a two-rate structure, which is 5 and 18, which may substantially bring down the GST on several goods because many of the goods from 12% rate would move to the 5% bracket and 28% are likely to move to the 18% bracket. So which will significantly reduce the GST on many goods. Secondly, with the two rate structure, the current classification disputes that happen will also substantially reduce in the two rate GST structure.
And Abhishek, if you have to discuss about the states and centers also, do you think how would they be compensated in terms of this loss in revenue that we are looking at and overall impact on the GST collections as well?
So my sense is that a couple of points. One is because the compensation cess tenure is ending in this financial year, what the government may do is to abolish compensation cess from next financial year and simply increase the rate on these 6-7 product categories to 40%, which 40%, I mean, today the compensation cess goes to the states as compensation, whereas if they remove compensation cess and have a 40% rate on these 6-7 products, that may get equally distributed between the center and the states as is the case for any GST collection. That's my sense. Secondly, on the overall GST collections, two things. One, if these goods, 12% goods move to 5% and 28% moves to 18, and especially the 28 moving to 18, it's a 10% reduction, and some significant GST collection contributors like, as I said, cement, white goods, two-wheelers, etc. The overall collections may come down, but also, I mean, there have been studies which say that whenever GST rates or VAT rates globally have been rationalized, the consumption picks up, and to some extent or to a large extent, it sort of covers up the collections losses because of the rate reductions, because of the consumption going up. Now, if that happens, then it's difficult to sort of take a guess as to how much will be the reduction because some of it will be covered up by the consumption going up. The other would be that today the compensation cess, as I mentioned, goes only to the states, whereas if the 40% goes to both the center and the states, some part of the revenue may get covered up there from those 6-7 product categories.
Okay, well, thank you, Abhishek, for that perspective. But that's all the time that we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.